I saw this headline in one of the trade newsletters that I read, and this one is from Freight Waves. And so I've been keeping track of shipping. Many people will be familiar with all the news headlines talking about the supply chain and all these problems. And so this headline, you look at it on its face would make you think one thing, but then you take it one step further, it really tells you what is going to happen. And that matters because the stock market is always about where the future is going. So let's start with this article. It says, New Year brings new all-time high for shipping's epic traffic jam. Record 105 container ships wait to berth in Los Angeles and Long Beach. And then you'll see this picture of all these green dots all over ports, all over the United States, barely 105 ships that are waiting to unload. And, instantly what I came up with is what I tweeted out, which is this tweet which says, shadow inventory is piling up. Come mid-year, inventories are going to swamp storage facilities. And people's reaction to that will be, meaning businesses' reaction to that will be what? Well, first, they'll be desperate to store this stuff someplace. And then as they realize they have just over-ordered by a factor of probably 2 or 3, they're going to cut prices to try and clear some of this. And when you think about what's on these ships, well, on these ships are probably parts, there's all kind of goods. And for the last 2 years, as we've pursued some form of lockdown, isolation, self-restriction in terms of how much we get out, what have we been doing? Well, we have been buying up a lot of stuff. And that's what's on these ships that are sitting off all of our ports filled with stuff. I have read reports about how there's stuff from Halloween still sitting really on these ships. So forget Christmas, there's stuff from like October that has still not been unloaded. And somewhere over 2022, we're going to catch up and all this stuff is going to be unloaded. And you are going to have all kinds of companies now have to deal with the problems on the reverse side, which is that through 2021, they've worried about running short, not having enough inventory. And now they're going to be in the reverse position where they realize they've over-ordered by a factor of 1, 2, 3, 4, 5, who knows how much. And now you are going to have this shocking slowdown in goods that is first going to show up, I believe, starting the second quarter of this year, maybe even in the first quarter, where companies, America 1.0 companies, because those are the folks that sell things in a big way. I mean, these are goods companies. They're buying finished product from places like China and Asia and then shipping it over. They're going to start to report huge rises in inventories, which will then be followed by a significant sales slowdown. So I then followed up my tweet talking about the shadow inventory, saying there is a record pileup of stuff coming, folks. As ships offshore unload, price of America 1.0 goods going to get cut just as pent-up demand is used up. Because what happened is that if you go back to March of 2020, we go through this completely unexpected, really once in 100-year reaction to a pandemic of locking down the entire country, and the whole world is doing this, which then drives demand for goods, particularly in the West, as governments provide income support to people. And so huge pent-up demand comes in. And then as their shortages develop, prices rise, which is being reported as inflation, and price rises will tend to diminish and dampen demand. And then we have the sort of like the after effect of everyone that's selling stuff says, well, high prices, everybody wants more, let me order more. And then you can't get it in, so you order even more just in case. And now you've got this massive, massive pileup. And in the end, what's going to happen is that you're going to see slowing growth, like radically slowing growth for these America 1.0 companies. And as I wrote in this tweet, slow growth for America 1.0 means markets are going to swing hard to America 2.0 growth stocks. And we're beginning to see that in the market. Like, for example, yesterday, our proxy for America 2.0 stocks, we use the ARK Innovation ETF that is run by Kathy Wood. She, just like us, we focus exclusively on innovation. We call it America 2.0. They tend to call it disruption. But that ETF bounced and bounced hard. And then underlying components, signature companies of America 2.0 and disruption, companies like Square, companies like Zoom, companies like Teladoc, they all found buyers. And if you went and looked at a daily chart yesterday, you would have seen that they kept being bid higher throughout the day. And we have really not seen that for nearly 3 or 4 months. And bottom line, here's why this all matters and why I'm making this video. So our stocks have gone through really a very painful, first started as a correction, and really by the end of 2021, we had a crash. Now, you would never know that if you own the S&P 500 or the Dow or even the NASDAQ composite, or even truthfully, an index like the Russell 2000, because for the most part, those things have so many stocks in them that they can hold their value. And then indices like the S&P 500, they have these big super tanker stocks like Apple and Amazon, that really are the ones that generated the vast majority of the performance for these companies. Now, our portfolios, we've got 30, 40, maybe 50 stocks in those portfolios. So we're very focused on very small companies. We didn't get the benefit of all of that. And so the correction and then the crash, it really hit us pretty hard. But now we've got a major turn coming, because the reason why we had the correction in 2021 is that people started to sell growth stocks because the companies that benefited initially under lockdown were companies like Zoom, where their growth jumped by like 300%. 300%. And that went on for multiple quarters. And then, of course, as you went into 22, the comparison relative to 2020, well, Zoom continued to grow, but just by like 30%. And so, of course, people started to sell these stocks, short these stocks, and then simultaneously, I believe that algorithms, something like that, picked up on a trade where they could buy these slow-growing America 1.0 stocks, which were trading at very low prices. Because remember, initially, the response to the lockdown was to actually anticipate that we were going to go through a Great Depression. And so people sold the stocks of these companies down very, very hard. And in truth, initially, volumes declined. And so it set a very low bar for them. So by buying these stocks, they put a bid underneath them and they start to move them higher. Eventually, other people jumped on the bandwagon and started to bid these higher. And simultaneously, someone came up with the idea of selling, shorting our stocks, America 2.0 stocks, disruption stocks, growth stocks, until now, I believe we're at the point where the selling is completely washed out. And now the stage is set for a huge reversal. These America 1.0 stocks that had these very low comparisons in 2021 now have very high comparisons. And then to make matters worse, they've got this massive pileup of inventory as a result of them over-ordering. To compound that issue, they've been raising prices, which is already diminishing demand, and then is going to diminish demand even more because a lot of the pent-up demand is already really been used up. I mean, people have bought a lot of stuff. They're sitting on a lot of inventory at home, just as every level of the supply chain has also built up inventory and has even more inventory coming. And so you're facing a scenario where there is going to be significant decline really in sales for these companies, significant decline in growth for these companies, and it's going to shift money to move very, very hard and quickly back into growth stocks, into America 2.0 stocks, and into disruption stocks. And we're beginning to see that already. And I believe that as the first quarter and then the second quarter unfolds, you will see a very, very hard shift back into our stocks. So I want to make this video because this picture of all these ships really is telling you where we are going, which is that represents massive amounts of shadow inventory for companies that prior to the pandemic were really in secular slowdown. They got a one-time boost as a result of the lockdown, which then eventually led to people sort of going and bidding their stocks up because they were showing growth, which led to our stocks being sold down. And now we're at the point where all the things that were going in the favor of these America 1.0 slow growth, secular decline stocks is now about to reverse and reverse radically. They're about to lose growth. They're about to lose pricing. And I believe they're about to lose massive market share as well as their very high flying prices for their stocks, where these stocks are now trading at very, very high multiples relative to their long-term growth rate. And that is very good for our stocks, very good for America 2.0 growth disruption stocks, because it means that demand in the stock market is swinging hard in our direction. And it means that I believe the selling in our stocks has washed out and a big recovery is going to unfold in 2022. And I know what people can say, Paul, interest rates are rising, inflation is rising. And I would tell you that if you look at that picture, it tells you that inflation is going to be cured by oversupply, by over-inventorying, by overstocking. And by year end, we'll be talking about a completely different thing, which is that we will have far too much of everything, and there will be price collapses in any number of categories of goods. And with that, you will also see interest rates go down. And I'm on the record as having said that I believe that we're going to have negative interest rates. And this picture of the map with all these ships is pointing and telling you that this is the direction that we're going. We're going to have inflation that goes away, lower interest rates. And for us, of course, our stocks, I believe they're setting up to surge higher. So be strong hands, BPOP, our time is coming. All right, this is Paul saying bye.